Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
You're with us here on a fresh new edition of Mid-Cap Radar. The market's down about 2 or 3 points. The premium holds with about a 40-odd point gain. So this is, a nowhere kind of a session. The early gains were given up. We're down about almost 65 points from the day's highest level. 10,300 odd is where we are. Of course, off the lows by about 15 points or so as well. The futures, I think, is something to note. But all in all, there is weakness which was visible yesterday, which is visible today as well. Titan is moving up once again, about 774 at the bottom of the screen. And so are a couple of other jewelry stocks. PC Jewelers is there. Maybe we should look at what's happening with TBZ, Tribhuvan Das as well. So that's basically what's going on. Samira, good afternoon.
Hi Prashant, good afternoon to you as well. So let's get started then. First up, our top stories. Market recovers from the day's low, but key indices still in the red. Nifty test 10,300. Mid-caps outperform with marginal gains.
FMCG, sanitary ware and paint stocks gain in hopes that the GST Council will consider reducing the 28% tax bracket in the two-day GST meeting that has begun today in Guwahati.
Petronet LNG gains as sales and margins beat estimates in Q2. Cadila, though, is under pressure on a Credit Suisse downgrade due to competition fears for Colitis drug Lialda.
Tata Motors trades higher ahead of its second quarter earnings. Street is keenly watching the JLR margins, which are expected at around 10.7%. Okay, those are the top stories. Earnings and more earnings. Sequent Scientific second quarter, the bottom of your screen. Net profit 30 crores. Compared to a loss same quarter last year. I think stocks moving up a bit. One-time gain is 17.5 crores. You adjust that and suddenly things go very, very flat. But 4% now, 108. Revenues are up about 17%. That's good. 265 crores compared to 226 odd crores. But you got to adjust that one-time gain to the profit. I think you're basically looking at about a 13 odd crore profit. A profit still, nevertheless, is compared to a loss. Let's bring in Ashwani Gujral, who's with us on the top of the show as always. Ashwani, thank you for your time. What would you say, directionally, things are going to get better today or maybe just close around same levels?
See, the market is not in a strong downtrend. That point is clear. The way it's been acting is that the first half generally tends to go down for whatever reason. But in the second half, because globally there is no follow through, the same shorts, etc., they cover, and by the end of the day, it does not look so bad. So this is typical of a correction. So the 130 to 330 trend is that it's likely to move higher. Particularly ICICI Bank is looking very interesting because since morning it actually went up as the Bank Nifty came down. So now it's turning and making fresh highs for the day. That should lead the Bank Nifty higher. So right now we are long on the Bank Nifty. I think Nifty could also close higher by 20-25 points. As far as individual stocks are concerned, Pidilite Industries, that's completed a correction. That's a buy with a stop of 790, target of 825. Eicher is a sell with a stop of 31,000, target of 29,800. And UltraTech is a sell with a stop of 4,400, target of 4,250.
What about Axis? Ashwani, you said ICICI is higher. Axis has also had an interesting move. Tomorrow is the board meeting where they're considering capital raise. That entire Bain news flow might get tested.
See, whatever happens tomorrow, I think Axis now is decisively moving up. It may get disappointed and lose 10 bucks tomorrow. But if that happens, it should be bought, because once we get past 550, which has been a strong resistance, I think Axis will start a new journey, and that will be about 70-80 bucks on the upside.
Indigo, Ashwani, 11 back to 1190. I think it got to about 1220 today.
See, I think aviation is looking strong. Jet Airways, Indigo, both are doing well. So I guess as long as crude is below say 70, maybe this upside will continue. So while these are trading buys, I won't say that they are great screaming buys, because the moment crude gets out of hand, there could be sharp knocks also. But I wouldn't be surprised if Indigo gets up to 1400.
Just one last name, Arvind. A big move yesterday, down at about 427, 428 now.
See, again, yesterday's kind of exuberance has been corrected. Now we can hold on to this 400, 420 type of zone. Again, post the news, Arvind, looks like it's going to move up. Basically, this market's key is in the hands of Reliance and ICICI Bank. If both these guys start moving, then, the market can fairly easily overcome this sort of, a weakness that we are seeing. So strong stocks just need to make a comeback, and I think we'll be able to soon get to fresh highs.
All right, Ashwani, thanks very much for your afternoon trades. Another stock that's in focus is Manappuram Finance. They reported numbers yesterday. The earnings were well below the street estimates. AUM growth has declined for the first time in 12 quarters. So here's a word from the management, Kapil Krishnan, the CFO, on their FY18 loan target as well as the consolidation that is being seen in the NBFC space.
We are targeting 20% year-on-year growth, and we are on track for that. As you know, demonetization was an unexpected one-off event, and despite that, we expect that year-on-year we will maintain our growth rates that we have projected on a consolidated basis. Cost of funds came down almost 60 basis Q1Q, and it is now 8.8%. The marginal cost of funds is 8.3%. So the NIM we expect to be steady because of cost of funds as well. We are always on the lookout for inorganic opportunities. We have evaluated many at the board level as well. So if as and when the board sees the right fit, we are definitely open for inorganic acquisitions. And as far as offers to us, nothing has been discussed at board level. This would be at promoter level, which has been denied actually, and we have posted the denial on the stock exchange as well in the past. So that's all I can say about that.
All right, so that's Cements has come out with their numbers. 181 crores on the EBITDA is a shade better actually. So operationally they have done well. I think it's the top line that we need to also look at, because 1268 crores is what they have done this quarter, which is quite low compared to what our poll had thrown up, which was about 1340 odd crores. Remember, on a Y-on-Y basis, numbers are not strictly comparable because they have seen the amalgamation of Trinetra, as well as Trishul Concrete. So because of that, on a Y-on-Y basis, the numbers will not be strictly comparable. But I think operationally, they have done well. So that's a good sign, and the stock is picking up. We will see, in terms of what the pricing outlook, etc. is, and that will be now the next trigger. Also, what has been the demand recovery in AP, how it can shape up going forward. But as of now, I think the street is taking these numbers, reacting to these numbers actually quite well. We'll see if Nigel can add some more details on this. But okay, so other expenditure has fallen sharply. So that has been actually one of the reasons why you're seeing also this good reception. So I suppose that's always good for any company. Prashant, anything more?
Nothing else. I mean, I think, the basic point with cement is that the cement industry working at 70-75% capacity, reporting numbers like they have. I mean, actually, forget profits, but the amount of cash they're throwing with the capacity utilization being low. Generally, I'm talking about India Cements, but as a sector, imagine what happens when capacity utilization moves up 5%, 10% more. So top line still sluggish, but I mean, on all of the parameters, as you said, other expenditure has dropped. I mean, I think that's helped margins, that's helped numbers at the net level for India Cements as well. I think we'll have more on India Cements with Nigel in a bit, but also, okay, I think Nigel is getting ready. Other expenses are down 51%. So that's a sharp drop which is coming in.
And actually the expectation was, I think why the stock is doing so well, and Nigel can correct me if I'm wrong, is that operationally it was supposed to be under pressure this time around because of the weakness in realizations and the higher fuel costs. But Nigel, you want to go ahead and tell us what you're picking up from these numbers?
Well, Sumera, on the top line, in fact, there is a bit of a degrowth, as you all were talking about that. We were working with a bit of a growth. But why the stock has suddenly moved up is because the street is taking note of the operating profit number. But, you need to keep in mind that the other expenditure, just highlight that component. That's taken a sharp downtick there. It's down close to around 50% on a year-on-year basis as well as on a sequential basis. Yes, we were expecting margin compression, but the operating profit that we've got, that's looking a little bit better. In addition to that, we have the finance cost. There's no reduction on that front. That's something that the street is really looking out for. So it was expected to be a subdued set of numbers on the back of the sand mining issues, the lack of sand availability in South India. Demand as well was not great. But the street is getting optimistic on the second half of the short point is on the top line, a bit of a degrowth. That's a bit of a disappointment. Though, in fact, it appears that the operating profit is better. That's strictly because the other expenditure has come down by 50% on a year-on-year basis as well as on a sequential basis. India Cements, they always enjoy that valuation comfort in terms of an EV per ton as well as EV upon EBITDA. The EV per ton is around that $80 per ton mark or even a little bit lower than that. And in terms of EV upon EBITDA, well, it trades at a sharp discount to its other big listed peers. Back here.
Nigel, thanks much for that. Navneet Education is another company that reported numbers. It's a seasonally weak quarter for them. The performance was a tad bit tepid. Gnanesh Gala, the MD of the company, now joins. Gnanesh Gala, the MD of the company, now joins in. Mr. Gala, thanks very much for speaking with us. I'm going to get straight away to your segmental performance, and I want to begin with stationery because over there you're still seeing losses on an EBIT level. What's the plan for this business? I know you've already given out some commentary saying that exports are under pressure and so on, but is there a feasible plan to turn this segment around?
Yeah, good afternoon. As far as exports are concerned, unfortunately, the currency rates are not in our hands, and that is the reason of reduction in sales as well as the margin in exports of stationery. So we are hoping that the currency level comes to its real levels, and unfortunately, the paper prices, which is behaving little differently than the currency prices first time. So all put together, it is putting pressure on the margins as far as exports are concerned. And as far as domestic stationery is concerned, normally in the first half, the profits are lower because of the fixed expenditure, but that is all recouped.
Right. And Mr. Gala, please accept my apologies, sir. We'll have to reschedule our chat for another time because we're getting numbers from Tata Motors now. Consolidated net profit has come in at 2,500 odd crores. So the number that we had was 1,391 crores. Okay, I'm going to take a moment to let that sink in. We'll see what this is on account of, but 2,500 crores is going to give wings to this stock. Naveen, before you get started on the internals, just a word on the profit.
So the profit has come in above our expectation, but the important number to watch out for Sumera will be the JLR margins. That is what we are trying to get right now. But yeah, profit is what 1,391, but there can be a lot of, see with Tata Motors what happens is there's been a lot of forex element or the other exceptional items that can be there. So that is something which we'll have to see, but operationally
okay, JLR margins at 11.8%, so that is looking good.
Very good because 10.6 or 10.7 was the street expectations. Yeah. Remember last time the management, when we had spoken to him after the results, he had clearly stated that going ahead the margins will improve, but still there was nobody had fathomed that it could be 11.6%. The highest margin on the street was also 11%. I guess we have.
But
Ashwin,
in the past, margins have gone up to that 14% mark.
Yeah,
right?
that was in the past. Yeah, so that remember, as we had told in the preview, also the dark horse will be the forex element. That if the forex losses have been reduced, this can be totally a big kicker.
I'm going to let you go through the numbers. Ashwin Patil of LKP Securities joins in. Hi Ashwin, good afternoon. How are these numbers looking to you? 11.8% is what JLR margins we have. Are you surprised?
Yeah, we were expecting about 10.5% of margins, but 11.8% margins are really very surprising and heartening. We need to see exactly whether there is any one-off which has led to this kind of number, or if it's operational performance, then it's really very good. We need to see in this quarter about the JLR numbers. The volumes are also good. There has been quite a good recovery. New launches were there. They took they happened. Global launches of some good models like Discovery had happened in this quarter. And that which is a high margin model, again FX and Jaguar FX, Jaguar F-Pace, that rollout was also on a global level. So I think we have seen good traction in product mix this quarter. And also on the domestic side, we have seen good MHCV numbers coming in. So overall, we were expecting good numbers in this quarter, but 11.8% margins on JLR is a surprise.
Right. So Ashwin, sorry, go ahead, Naveen.
One thing, Ashwin, I wanted to ask you, do you think there will be a forex element into this? Because last time the fall in the margins for JLR was seen majorly because of the forex losses. Do you think that will be also one of the one-offs that would have triggered this kind of increase in the margins, or it's purely on the basis of the improvement in the product mix, as you pointed out?
See, since last 3-4 quarters, JLR's margins are pinned down mainly on the hedges, the unrealized hedges that they have taken on their FX book. So the management had already guided us that there will be, unwinding of these hedges going on, and as the currency becomes favorable, every quarter you may see some sort of improvement in the JLR margins. And the margins which were reported last quarter were below 10%, and those were considered to be the lowest. So going forward, they had already guided us that as the forex book turns favorable for them, the margins will see improvement. So I don't think any one-off sort of forex thing will be there, but that has become a part and parcel of Tata Motors' P&L and balance sheet. Specifically of JLR. So I think, that improvement, unwinding of the hedge book is seen this quarter, and that improvement is going to continue in the ensuing quarters as well.
All right, stay on with us. Ashwin Prakash Diwan joins in as well. Hi, Prakash. Good afternoon to you. So JLR has delivered, and how almost 12% the margins seem to be touching. They now have some, 3 more launches lined up for the next quarter. What's your take on the current numbers and the outlook now on Tata Motors?
So, this seems to be a big vindication of the faith that people had after the howler of a number that we saw in the last quarter. And primarily what was important to understand is that the forex losses that they had been incurring quarter on quarter because of the hedged, the derivative positions that they had, that is finally kind of bottomed out. Whatever losses they had to take on their books, that's done. Going forward, I think the JLR, engine is going to rev up much more. The launches are of very, very high-end cars which have huge acceptance, and even if they don't get great volumes, they'll get very decent margin traction there. So I'm quite positive. And then the domestic passenger business also is looking up, commercial business looking up.
Okay, I think, Prakash, we've snapped that connection with you. We'll try and get back to you. Just a moment to focus on Amara Raja's numbers also. The net profit coming in at nearly 130 crores looks good. There is expansion on the EBITDA level as well. But I just wanted to get back to Tata Motors. We'll come back to Amara Raja in a bit. We have Sanjeev Bhasin joining in as well. Sanjeev, okay, we don't have it. We have Ashwin with us. Ashwin, what was the target that you had on TAMO, and how would you look to revise earnings henceforth?
We were having a target close to 500 rupees, and we need to get back, to our Excel sheets and see how much we can, what we can do with it. But prima facie, I mean, I think that little bit of raise in the target is definitely guaranteed.
Mr. Bhasin, Naveen here. I wanted to understand your first take on the numbers, specifically the JLR margins. What is your first take, sir?
Yeah, so I would say last quarter was an aberration, and this quarter onwards you should start to see better improvement in the margins. So in line with what our estimates are, we would only see wait for the language from the management and then take it forward. But for us, we thought the last quarter was the worst, and we see an improvement from here on.
But do you see, in terms of the valuation, now the stock has already moved up almost 30% from the lows of the quarter one. So do you see some more upside for the stock over here, given the numbers that the company has delivered?
So on Diwali, we had a buy rating, and that was one of our top recommendations. We have a year-end, 31st March target of 500 rupees, and we stand by that. We think locally also the CV cycle may have bought, is showing a lot of traction, and that should be the added kicker locally, which can add some more color to the stock.
All right, Sanjeev, Ashwin, Prakash, thanks very much for your quick take on Tata Motors. So that's the word on that. But Naveen, you want to quickly add something on Amara Raja?
So Amara Raja, the margins look really good. Remember what has happened just a week back, we were having a word with a few dealers. What they have been doing is Amara Raja as against Exide. Remember Exide, the margins had seen a drop. With Amara Raja, the thing has been, in the last 3 to 4 months, they have been doing constant price increases. So they have been able to pass on the prices with the new product launches and the improvement in the product mix, which unfortunately for Exide wasn't been happening. And that can be clearly seen in the Amara Raja numbers. Just one thing I would like to talk about Tata Motors also. The stock is given up from the top. Key reason being the stock has already run up almost 25-30% since the Q1 numbers. A lot of that was factored in. And also remember one thing, consistency. Going ahead, will the company be able to deliver? That is the one key question. The 11% margins, wasn't it a one-off? So we will have to see what was the forex one-off losses or anything from the management. So analyst meet will be something which will be...
I was reading the notes to accounts.
Yeah.
So starting this quarter, they are starting to give, I couldn't make out them, the print is too small, but they have given separately, segment-wise, the profit and loss on account of hedging with regards to foreign currency.
Okay.
I mean, it has been presented because they reviewed it post the March quarter. I think it will be there for the first quarter and this quarter as well. So I think we should be able to...
That is something which I don't have in my press release right now, but that is something which we'll have to check whether it's one-off. And apart from that, also the product mix, the consistency in the improvement of product mix, will that be sustaining going ahead? So yeah, that's about it.
Okay, two numbers, of course, by far the biggest number is Tata Motors. Look at that. I mean, it's down now 2.25%, but as Naveen pointed out, like everything in the market, Tata Motors had also had a spectacular run coming into these results. I mean, just per se numbers prima facie, not very much to really complain about, especially on the JLR margin side. We'll come back on that forex bit in a bit. We will wrap this up here, this edition of Midcap Radar. But stay tuned, more on Tata Motors and Amara Raja coming up.